Hi guys, I hope you're doing well. Today we are talking about money in the bank and how in the current context you can protect your money in the banks. So why do we talk about that? Because at Peopleizer we seek to empower people, and many of you reach out to us and ask us, well, how can I protect my money in the bank? Right? I see inflation, I see government sizing banks accounts. I'm concerned about that, right? So what can I do about it? So to provide you with solution today, we've got Andrew in our call, and Andrew is an entrepreneur and has numerous years of experience in investing. He also constantly try to search for solution for himself or people around him, and that makes it different from other people. So let's go. Hi, Andrew. It's
Hi,
good.
Julian.
It's
I
good to
hope
have
you're
you
doing
today.
well. Yes, thank
Yeah,
you.
very
It's
well.
great to be here.
Cool. First things first, before we jump into ideas on how can we help our audience with their money in the bank, it's useful to spend a little bit of time to describe the context, and especially what are the signals that our audience can see, be it on a daily basis or signals which are a bit less obvious, that can tell them that, oh, there's a risk on my money in the bank actually. So what do you think are those signals, Andrews?
Well, I think there you can divide it into different categories. So there's a type of risk of the money itself. So, for example, if you have dollar or euros, what is the chance that the value is going to go down due to inflation? Is there a chance for catastrophic inflation? Another type of risk is for the institution that is holding your money. And that can be the bank going bust. It can be the bank getting hacked, whether that's a real event or a false flag event.
Mm.
And it can be government interference, like we have seen in Canada, the government freezing people's bank accounts. So that is actually a perfect example of an event where you see the money in the bank is not as safe as it used to be. If the mere fact that something like that can happen, that tells you that the banking institutions and the idea of money in the bank, it's not nearly as safe as it was perceived in the past.
Okay, all right. And let's try to be even more practical for our audience. What can they do on a daily basis, right? Um, can they observe things on a daily basis by just going to the supermarket or whatever? Because it's important to
Yeah.
really help people to relate what they see to this threat around their money in the bank.
So that's again actually touches on the two categories as well, because for example, seeing on the daily basis that because there is people talk about inflation, but usually the kind of inflation that the government talks about, it's some kind of average that does not really relate to the typical person, because for most normal people, the main expenses are housing and food, right? So and having average of everything, that's not that relevant. So if you just doing your daily grocery shopping and you see that the prices are going up, and you see that the prices of housing are going up, that gives you an idea that the inflation is actually quite bad, and it might be much worse than what the official figures are. And that means then that you might want to think, should I really have all of my money in a fiat currency like euro or British pound? Or should I try to look for other alternatives just to protect the value of the money itself?
Okay, before going into solutions, I want to help a little bit our audience. So basically, we see signals, inflation, the price in the supermarket increase. I mean, I'm living in Europe and I see it on a weekly basis. The price of yogurt or cereal, for instance, increase regularly. And so if this is a signal, there's a risk. And if you have a risk, it's actually a free option that you have. And I want to give those free options to the audience because before we go into solutions, so that they are aware that they've got free options available. The first option of a risk versus a risk is basically you're ready to run the risk, basically. So you accept the risk and you decide to do nothing. That's it. But you do nothing, you can be impacted by this risk, or maybe nothing will happen. But the key point is you decide to do nothing. For instance, I decide to keep my money in the bank and I will do nothing about it. The second option you have is basically avoiding the risk. So let's imagine you've got all your money in the bank. You can decide to put everything into gold, and then you basically avoid this risk on the banking system, on anyone sizing your money or you losing value in the money. So that's your second option versus risk. And the third option is basically to mitigate the risk. So you want to reduce the likelihood or the impact of this risk. So you're not totally avoiding the risk, but you're reducing the probability or the impact of this risk. For instance, you take half of your money in the bank and you put it somewhere else. You put it at home, for instance, right? Or you put it to gold or things like that. So it's important for you guys to understand that you've got those three options and you're free to decide whatever you want to do. Okay, enough for me talking. Andrew.
This is actually really nice the way you talk about it, because actually I would say, you know, what people have to realize, there is always a risk. You know, like doing nothing involves some risk, and if you're trying to do something about the risk, there's of course a risk as well. And even if you're going for very safe investment options, there is always the opportunity risk, because in a times of economic upheaval, in a times of crisis, something that's very beneficial is actually if you have a lot of cash sitting somewhere waiting for some opportunity to invest. So if you just put everything in the gold, you will lose that option. So it's about finding some kind of balance for me. So basically, it's all about diversification. And if for example, someone in our audience decides, okay, I for various reasons I need or I prefer to keep most of the money in, I would not recommend all the money, but I would say, let's say they want to keep most of the money as cash. There's still options that are available for them for diversification without cash itself, within cash itself.
Like what, for instance?
Well, you can diversify to other fiat currencies. So I do believe that big inflation is coming for these types of currencies in general, but it might come later for some currencies than others, and some might be affected more than others. There are countries that might be safer to bank there than others in terms of government interference or the banks themselves going bust. So this is an example of diversification while still within cash, while still keeping cash.
Okay, cool. Let's try to take the point of view of our audience. Let's imagine that most of our audience is living in a country and they have 1 to 2 bank accounts in that country where they live. And I want to know from their perspective, right? What is the minimum amount of effort that they could do to start protecting their money in the bank? So basically, I've got 1 to 2 bank accounts. Let's imagine I live in Germany. I've got 1 to 2 bank accounts with two banks in Germany. What can I do to start protecting myself, protecting my money in the bank? But I want to put the least amount of effort into that. What can I do?
Well, so I would say for start, it's always good to have more than one bank account and also more than one payment card, by the way, because there is also an element of protecting the money. But if you are not able to access and use the money, then it's not that useful. And it can happen, for example, that your card get blocked. It has happened before. And if people relied on just one card, they might be in a situation where they cannot pay their bills, especially nowadays when everything is online.
So let's imagine, let me pause you a little bit. So let's imagine I'm in Germany, I've got one bank account. An idea is for me to start to go to another bank and open another bank account. What other banks? Should I opt for main banks in Germany? Should I buy?
Yeah, so I think let's say at minimum, everyone should have more than one bank account.
Yep.
And more than one payment card, just to have backup options and redundancies. That might not protect you from the banking system collapsing, the currency collapsing, government interference, but it does protect you from these kind of situations that I described. Then if you want to diversify further, instead of just going for the main big banks, you might look at some banking alternatives. Nowadays, there are these mobile banks, and sometimes they are perceived a bit less trustworthy, but they work usually quite well. And the nice thing is that because they are like the banking system is a little bit behind with considering them full banks.
Can we give a few names, or at least one name, so that people
like
resonate with people?
these
Because many
kind of
people don't
banks,
know
like,
about that.
in Germany, there is N26. There is in Europe you have Revolut, TransferWise. It's called Wise now.
Okay.
There's many others, and the nice thing about this is that while it might not be the best place to keep large amounts of money, is from our experiences that often they are a little bit behind with reporting people to the government. So often when you're doing your tax return, the government doesn't know about these bank accounts. Of course, we're not suggesting that people should hide something, but it does mean that if the government decides they're going to freeze your bank account, they probably don't know about that one. And the same might happen is actually if you live in Germany, it might not be that difficult to open a bank account in one of the neighboring EU countries. And that already gives you some diversification. It's still in EU, but it's kind of controlled by a different government. There might even be possibility of another currency. So it gives you some options. And it might not be that you want to put most of your money there, but maybe just a couple $100 just to have an option that if everything gets blocked, you're still able to buy a train ticket and some groceries, stuff like that.
Okay. So yeah, diversification. Obviously, it seems that our audience, if there's one thing that our audience need to remember so far out of this talk, is diversification. Right? Don't put all your eggs in the same basket.
Yes.
Because if you drop the basket on the floor, all the eggs will be broken, and you won't have anything anymore. Right? It sounds obvious, but it's good to remind the people that this is a principle to follow, and how to follow it. Have multiple bank accounts, have multiple credit debit cards that you can use, right? And it's not too complicated. So we don't, in this video, we will not go into the how, basically. How do you open a Revolut account? How do you open a Wise account? But this is services that can be offered by Andrew. In this video, we want you to understand how to do the things in general, how to think, how to approach that stuff. Okay, let's go back to inflation. How can I protect my money in the bank from inflation? Basically, should I buy precious metal, for instance?
This is a very classical, very traditional way to protect against inflation that people have been doing for decades. Yeah. So the classic way to do it is you get some gold. In some cases, people might argue that silver is even better hedge.
But why going to precious metal versus currencies, versus fiat currencies? What's the advantage? Because it might not be clear to people.
Yeah, okay. People. So precious metals are historically, they have been used as a currency, as a payment, before basically fiat currencies like dollar were invented. And up to some point in time, these were partially still backed by gold. So there is a lot of history on that. Precious metals have an underlying value. So not just for jewelry, but also nowadays, actually, it has excellent electric thermal conductivity. It's very corrosion resistant. So all these properties make it very valuable, and it's desirable, and it's also very suitable as money because it's divisible, it's durable, and it has a recognizable value basically. And what is also important is that with precious metals, there is a limited amount available in Earth. Of course, sometimes new metal is discovered, but it's still limited and it takes some effort to mine it. So unlike dollar or euro, they cannot just print more of it. So that means it retains value. So that makes it excellent as payment. Although nowadays it's maybe not so practical because you cannot use it easily in a digital way. Although there are some options for that now, we can get to that later. But this makes it good basically as a payment. And historically it has retained also value. So we have seen, if you look back in time, you can see what you could purchase with some amount of silver or gold, and what you can purchase for it now, and you can see that it roughly correlates with the inflation of the US dollar over the last century.
Yeah, and then the property of trust, right? Because it basically this precious metal go across multiple countries. It doesn't belong
Yes.
to a country, and it doesn't rely on the trust of
Yes, exactly.
one specific government. It's
yes. So it's something intrinsic basically to the world or to nature, and it's not an invention of some government. Of course, if you have gold stored at some third-party vault, you need to trust that organization. But the gold itself is not dependent on any one party. Whereas if you have euro, the value of that currency and the supply of that currency is controlled by the European Union, basically.
Okay, so I have money in the bank. What should I invest in? Should I allocate some part to gold, some part to silver? What should I do? And how many percent roughly?
So usually people talk about, what we talk about is that gold, we don't really see that as an investment, but as a hedge. And that word means that it basically backs your cash. So, or protects it from inflation. So it depends a bit, up to you, how much you want to allocate, because obviously gold is not as difficult to liquidate as real estate, for example, but it's for sure more complicated and slower than just changing dollars to euro. So it depends how much cash you have and how much liquidity do you need. So I would say up to 50% of your cash you can convert to gold. I would probably not go over that, but the minimum, sometimes people talk about 5%, but I would say in nowadays I would put at least 20% of my cash into gold.
At least 20%. Okay.
Yeah.
All right. So that's for gold. What about silver? What do you think of silver?
I think silver is also an excellent alternative to gold, but personally, I would not put nearly as much money into silver. There's, in some ways, silver has shown to be a better hedge against inflation even than gold, but it's much less practical to hold it physically, just because of the low value. So you need very large quantities, and the thing is about silver, it's much more volatile because it's the primary value of silver is driven by industrial demand, much more than investments or jewelry. So it doesn't always correlate, the price fluctuations don't always correlate with what's happening in the world. So it's a nice diversification option. Okay, so I have gold, I'm going to buy some other things, but it's not, I would not say it's like a primary protection against what might be happening in the world. Because if things go really wild in the world, you can be pretty much guaranteed that the price of gold will go up. But with silver, that might not be the case, because it might depend on other factors.
So would there be any advantage of silver versus gold then? Or there's none actually?
So. Not as a replacement to gold, but as a diversification.
Purely diversification.
Right? Yes, exactly.
Okay, cool. As for silver, if we look at diversification, what do you think about putting part of the money in the bank into cryptocurrencies, for instance?
I think that's an excellent idea. And well, there's a few reasons. One of the reasons is that while cryptocurrencies are still very volatile, as a sort of alternative payment option. It's very interesting from the point of view that when you use cryptocurrencies, you don't need to rely on third parties. You can be your own bank, so to speak. So that means all these problems with government interference, trusting banks, you can basically skip that completely, and you
So
don't
so
need.
why can you skip that completely? I mean, some of our audience, some of the guys in the audience may have difficulty to understand how can you be your own bank? How is it possible?
So with cash, if you have cash physically,
Yeah.
you can put it in your pocket, you can put it in your wallet, and you can go and pay someone for it, and you don't need anyone's permission to do that, right? And you can just store your cash, physical cash, at home. So in that regard, you are your own bank. But nowadays, usually people just pay with Visa or Mastercard, and
With their phone.
they send bank transactions. So it's all stored in a bank, and it's all digitally done online. So maybe Visa decides to block your card, or the bank decides to block you, or the government, or whatever, or the money disappears from the bank. So you need to rely on third parties to continue allowing you to use the service. So using cryptocurrencies, it's basically a digital version of cash. You have a kind of digital wallet, which is well, let's put it simply. It's a kind of interface, software interface that allows you to store access to your crypto, and I can just send you some crypto, and you can send it to me, and we can transact this way.
Okay.
So we don't need a bank, we don't need a broker. Well, we need the internet and electricity, but that's about it.
Okay. Anything that people should know about cryptocurrencies?
And to add to that, and on top of that, it's very private. So sometimes people argue about how private it is, but I mean, if you compare it to making payments with a debit card and using bank account, it's like a night and day difference. Of course, it's almost completely private in that regard. Okay. So that is also a big advantage. And sometimes people think like, oh, to protect my cash, should I go into gold or should I go into crypto? I would not say that you should do one or the other. I would say people should do both. Okay. Because they have a different purpose. Kind of gold is a more sure thing in terms of protecting against the devaluation of the currency or some kind of bad things happening in the world. It's more or less sure in that regard, but it might be a little bit more difficult to liquidate and transact with. Although actually it's not as bad as people think. Whereas with crypto, I can just send you some crypto right now, so it's like paying with cash, but the fluctuation might be a bit more.
All right. So to sum up, people have the option of diversifying and then opening multiple bank accounts, having multiple credit card or debit card, allocating part of the money to precious metal with a recommendation toward gold rather than silver. They could go to silver as well to even diversify within precious metal, as well as allocating money to cryptocurrencies. We didn't name any cryptocurrencies, but would there be a preference for one crypto versus others?
So there's actually two categories of cryptocurrencies, because there's the sort of what I would call classical cryptocurrencies like Bitcoin, where the value fluctuates sometimes a lot, but that can sometimes create some investment opportunities for people who are interested in that. This some people consider that the future. We can argue about that, but that is certainly something people can invest in. It gives a lot of diversification compared to just having gold and cash. But there's also another type of cryptocurrencies nowadays. It's cryptocurrencies that where you need to somewhat rely on third parties. They are called stable coins. And this is a crypto which is stable versus, for example, US dollar or versus gold even. And to make it stable, there is some third party that is basically whenever you give them money to purchase this crypto, they use it to buy dollars or to buy gold, and that makes the value stable. So in that regard, you have to trust them that they will keep doing that to keep that value stable. But on the other hand, it still has all the advantages of crypto. So for example, if you and me want to transact, but we want to do it in a private way and without banks, we could use one of those things, and then we don't have to worry about the fluctuations. So that can be a very nice alternative to cash, actually, and to using the bank system.
All right, cool. That's good. Is there anything that we miss in terms of allocation? Is there any other option that people have that we didn't cover?
Well, of course, you can. You have all the classical investment options. You can put money in a real estate. You can buy stocks and so on. But these things are maybe. This is really investing then, in terms of just protecting yourself against inflation. In terms of in terms of keeping it simple and just making sure that you have some at least somewhat liquid options for protecting your cash in a bank. It's about diversification into other currencies, into other bank accounts, maybe ideally, if possible, in other countries, and just making sure that you're able to transact if your bank account would get blocked. So, okay, if I have a bank account in another country, I have another backup payment card, I'm probably fine. And then, have some gold, have some crypto. And then after that, if you have money to invest, you can think like, should I buy a land over there? Should I buy some stocks? But that's another discussion.
That's good you touch on that, because this talk is about basically protecting your money. We're not talking about investment. If you want to invest, you will run another type of risk. For instance, if you invest in the real estate market right now, where there's a lot of indicators that it's going to stop and crash, you are running a massive risk. So we don't want to go into that dimension. We're talking about the dimension of protecting your money.
So maybe to say something about this as well, because for example, when we talk about Bitcoin, that can be seen more as an investment because it's much more speculative in terms of the value.
Usually people will go into this for speculation.
Yes, but in terms of crypto itself, we're not talking about specific cryptocurrencies, whether it's a good idea or not. That's really investing territory. But what I was trying to say, that the crypto itself in general is a good alternative for making transactions. So that was the point, not whether people should invest in Bitcoin. And the same goes about silver, actually, or if other precious metals, platinum, palladium, which are much more volatile. I would say this is also more an investment speculation territory, much more than gold.
Okay.
So
perfect. All right, Andrew. That's a lot of advice for our viewers. If you listen to this talk, try to take action, because again, as you remember, you've got three approaches to risk, right? You can either do nothing, you can avoid it, or you can start mitigating it. And we do think, according to Andrew's advice, there's actually some actions, like for instance, going to open another bank account or opening an account with Revolut or any online bank or neobank, doesn't require a lot of effort from your side, right? I guess it can be done within 15 to 20 minutes of uploading some key documents and providing some information. So it's worth it. I think it's worth it in terms of diversification at a low effort, right? Being in terms of money, in terms of time, or in terms of effort that you need to do this. Thank you, Andrew.
Go ahead. I just want to add, at minimum, people should make sure that they are not one of these people who just have one bank account and one payment card.
Yeah,
That I would not recommend. But beyond that, they can
That's
decide how much effort they want to put into it.
perfect. All right. That was great to have you today,
Yes.
and we'll continue
you.
to empower people. Cheers. Bye.
Thank you. Bye.